Hello, hello. You guys will give me a few minutes. I am waiting for Trish to join. And Allison is already on. Give me just a moment, Allison. There we go. All right. Sorry, guys. This is that awkward moment when I'm waiting for my sign on from yours. What's waiting on you? All right, hold on. I'm getting messages from Trish. All right, she's about to come on. And then once Trish and I kind of just come on, and then Allison will bring you in and we will start it up. As always, thank everyone for joining. I'm sorry, I'm so sorry. I'm trying to read this stuff as it comes in. Here we go. So Trish is in, and I'm just waiting for her to join, and we'll get started, guys. Hey, Lex. We got Leah. Hey, guys. All right, so Trish, you got, oh, there we go.
Hello.
Hi. Sorry.
I don't know what happened. I requested you like 3 times, but it's all good.
Yeah, my bad.
Yeah,
So really quick, we'll kind of set the stage because I know Allison is already in queue and we'll bring her in. But for everyone who's already on the live, of course, thank you for joining. We do have a special guest tonight. The focus is real estate, but a big part of real estate is being able to purchase real estate. And that does, for a great percentage of people, require that you have some type of financing through a lender. And a big part of that is making sure that you're educated and you know what that process is and what you need to be able to get approved for that financing. I also would assume that some agents may join this live. And of course, on our side, it's talking about us choosing credible, dependable, and just well-versed lenders that we can have on our team to be able to provide as a resource to our clients that may not already have a lender coming into the process. So as you guys are on our lives, you can go ahead and start sending questions if you have them. Once Allison comes on, you can ask questions. Trish and I will do our best to facilitate those questions to make sure they're answered for you guys. So I just want us to have fun like we always do on our Sunday nights together. But I'm excited to have Allison on. I'm going to let her introduce herself, of course, but I followed her for a little while on social media. The content she puts out is great. She has a very genuine approach and she just wants to help people and she just tells it like it is. So I can definitely appreciate that. I'm sure Trish, you can appreciate that. But she's about her business. And icing on the cake is that she is a soror. She is a member of Delta Sigma Theta Sorority Incorporated. So that just lets you know it's legit, okay? But Trish, anything, I know we're kind of jumping in because that little issue in the beginning, but since we have people on the live now, anything on your end before we
no,
kind of
I mean,
go?
I do have one question for you, but I just want to do some brief introductions,
Yeah.
just in case, because sometimes we do assume that people look at our pages and know what we do, but then they don't. So just out of respect, obviously my name is Patricia Haynes and I own my own financial practice here in Atlanta, but I do serve across the US. My goal and my passion is just to make sure that everybody is financially literate, and that we do understand what it takes to get to, to whatever it is that our dream is financially. So yeah, Jay, do you want to introduce yourself?
Absolutely. So for those that don't already know me, my name is Jay. I am CEO for Just Jay Realty. I am a licensed real estate agent here in the state of Georgia, able to assist people with any of their real estate needs, whether they're in the state of Georgia or not. Trish and I both have an extensive background when it comes to the financial industry. I think combined we have about 30 plus years in the financial industry. So they're resourceful, Black women that want to be able to give back to anyone who kind of will receive the information. Our reasons for doing all this is very genuine and has genuine intent. So this is where we are now. Make sure if you're not already following each of us, make sure you follow us and definitely follow Allison to keep up with the knowledge that she's going to give us tonight. So if we're ready, we can go ahead and bring Allison on. Did you have anything else for me, Trish?
Yeah, I just want to ask you. I mean, I know you picked tonight's subject. So tell all of us why you wanted us to know more about the fact that not all lending is equal.
Oh, so all lenders are not created equal. That is something that I think prior to me getting in real estate officially, I didn't really think about or know about, but being in this industry and kind of having lenders on my team and working with clients who bring forth their own lenders, I quickly find out that all lenders are not created equally. They don't have the same passion. They don't have the same drive. They don't know as much as each other. And I honestly will say it has nothing to do with their tenure in their respective fields or the respective field of being a loan officer. It's just a matter of how resourceful they are, how committed they are to assisting clients, and things that they can provide. I know people who are on this live, I'm not sure if you can attest to it, Trish, but you have some people out here where lenders are able to approve loans at a certain credit score, which Allison will talk about. You have lenders that are able to allow you to take advantage of certain programs. And then on my side as an agent, I have lenders that are able to do exactly what I need them to do. Close loans quick, consult with my clients, be very thorough and educate you in the process. So it just depends. There are a lot of lenders out here and they're not created equal. I'm not going to say there are good lenders and bad lenders. I'm just going to say that they're not created equally. That is the better way to say it. But Allison is super dope.
Okay, well, I am definitely excited. Let's get this information in. I hope everybody have their pen and papers ready to take good notes tonight.
So they'll add her. She'll be the third person on. I don't think I've ever had more than one.
Yeah.
Oh yeah. I've never had more.
Yeah.
Okay.
Hi.
Hello, ladies.
Hello.
So I'm on my Bluetooth. So if you can't hear me at any moment, please let me know.
Okay.
We can hear you fine. I can hear you
fine. Okay, good. All right. So since I don't have any makeup, I just put a little filter because you all look really beautiful.
Well, I don't have any makeup other than lipstick, so let me add my filter.
Look.
Listen, it's 9 o'clock.
Yes. But thanks so much for joining me. I look forward to answering any questions that you all have about the mortgage industry. As Jay said, I'm pretty straightforward. I've been in the industry for, I say my entire life because my mom, she's been in the mortgage industry longer than I've known. And then when I graduated 10 years ago, I joined her. So my sister has 20 years, I have 10 years, and we're just a mortgage family. We're exposed to a lot of different scenarios, which allows us to close deals that other lenders might not be able to do. So I know you were saying all lenders aren't created equally, so we can get into that a little bit more, but I look forward to this conversation.
Yeah, definitely. Well, I mean, I definitely want you to take the floor, have at it. I do have some questions that was brought to my attention since we've advertised that we will have a lender on tonight. I'm sure there's some things that you may want to highlight. So if I don't cover it or the conversation goes into that direction, then let's just have it, you know, let's just let it be a natural type of
Yeah.
conversation. And of course, between myself and Trish, when you are speaking, if any of our viewers put questions into the chat, we may kind of slide those in as well. But
Okay.
I want to go with kind of where we're going from. Trish kind of asked me where I got the title from with all lenders are not created equal. Let's just keep that flowing. What does that mean to you as a loan officer, as a lender? What does that mean to you?
Yeah, so being in the mortgage industry is an old industry. You know, there are a lot of licensed mortgage loan originators who they don't retire. So for the most part, old, certain type of demographic. So when it comes to all these new programs that are coming out, a lot of loan officers who are seasoned, they don't necessarily try to understand those programs. So I call them A cut, A line situations. Um, they'll say, hey, we can't do the loan, we can't do the deal. Whereas if you look into guidelines, maybe if an underwriter comes to you and says, hey, something is needed, sometimes you have to go in and you have to combat the underwriter, letting them know, okay, actually, this is the guideline. This documentation should be fine to override this. So in the mortgage industry, it's not just a simple, hey, you complete an application, now you're under contract, let's submit it through and you'll get to the closing table. There's a lot that happens behind the scenes, and there's a lot that will come up that we might not know about. We learn our customers a lot, our clients, once we actually approve your loan, review your loan, make sure that an investor is going to take over this loan on the secondary market. So when it comes to FHA, conventional, all of these different loan programs, it's not just about their guidelines, it's also about this loan has to be sold to an investor. And if something doesn't align with what that investor wants, they're going to ask questions. So they may say, for example, if someone is doing 3% down for a conventional loan and they're telling me, oh, yeah, I'm a first time home buyer, that's how we structured the loan. And if it comes back that, hey, you actually signed your grandmother's deed, you're not a first time home buyer. And then we have to explain to you that, okay, you have to put down 5%. Because you're not a first time home buyer. Conventional loans allow you to put down 3% if you're a first time home buyer or if you haven't owned a home within the past 3 years. So a lot of times myself, I will have a lot of conversations on the front end if I know that there are different situations or scenarios that can change the loan once it's submitted. Other loan officers might not take that time. One, they might not know because we have kind of like, I have a network of loan officers who ask me a million questions. And, you know, or even my branch manager. My branch manager has been in the industry 30 years. He called me on Friday and he said, hey, how did you get that deal go through? I have a tricky deal similar. So there's a lot of collaboration that goes into getting the loans to closing. And if you have someone that doesn't have the network or doesn't have the resources in order to get a loan approved that is not just a line, perfect credit, perfect scenario, then you'll be in a situation where you have to contact your agent or your realtor and say, hey, this loan is not going to go through. And sometimes they don't even call, you know, they'll go ghost and they won't give an update, but it's because they're trying to search for an answer.
Right.
So that's kind of some of the things that go on behind the scenes. And you want to have someone that you trust to say, hey, is this a real fire? Am I concerned? Or you can trust that, okay, this person, I know she's going to fight to get us to the closing table.
Right. So I like that analogy that you use right at the end. Having someone that you trust and you know, and someone that's going to fight to get you to the closing table. My question before that was going to be for consumers, because as agents, we vet before we, at least we should be vetting who's on our
Mm-hmm.
team and who we're going to put out there. Of course, we can't tell a client, oh, you have to use my lender, or we shouldn't tell a client that, but we've already vetted them. So for clients that just want to go out and find a good lender, how would they know that you do this, that you do have passion, that you do keep up with
Mm-hmm.
all of the new stuff, or that you're really going to fight for them? How would they know that?
Right. So I think it all goes into the conversation on the front end. I have a series of questions I'll ask to try to uncover any red flags in our initial conversation. If you have someone that just seems like, okay, they're trying to get you to complete an app, kind of push papers, like not have that conversation or that foundation, then that can be a red flag. Because, yes, if your situation is, like I said, perfect, A1, nothing is going to come up, then you can do a loan with a bank. But if you notice, a lot of people who don't have perfect situations, they get denied from the bank because the bank is kind of just so there are good loan officers who work for banks, but loan officers who work for banks, they don't have to be state licensed. So there is a major barrier of entry when it comes to being successful on the 100% commission side because you have to know guidelines. No one is going to help you get the deal closed. So if you go to a bank, you complete the application and they're like, hey, yeah, you're pre-approved for $300,000 or $400,000, and that's good. But on my end, most of the people who complete applications, they complete them incorrectly. So that's why we ask you for all of your documents. And I really push hard and say, hey, here's a checklist of documents. Once I receive all of your documents, I'll evaluate and have an update for you. Because the average person, they're going to gross up their income.
Mm-hmm.
They're not going to calculate their income to give an accurate depiction of what they make monthly. Or when it comes to unanswered questions on the application, I can say, okay, well, you said you own real estate. Can you provide me more information? Is this a rental? Like what is it? So if I know that they don't complete an application on the front end, then a banker who is just submitting the application to the underwriter will actually kind of originate the loan with the bank. And that's the same with someone who might not be as experienced. They'll just submit it. And then when the underwriter comes back with all of these conditions, it's like, okay, well, can we do it or can we not do it? You have 30 conditions. Usually with a loan officer, you want to have as minimal conditions as possible. Like if I know someone who maybe their job history is jumpy, you can still get a mortgage, but we have to be strategic. You might have to write a letter. I might tell you, okay, write this letter of explanation. Or if you're just going through any type of situation, we want to paint the picture for the underwriter prior to submitting your loan. Whereas someone else will just submit the application, submit the contract, and then the underwriter will say, okay, to approve this loan, A through Z has to be done. And now that's when people start scrambling. They're like, they keep asking me for this, they keep asking me for that. And it turns into a stressful process. Even though getting a mortgage is stressful anyway, but if you have someone who can kind of explain, oh, yeah, I remember she did tell me if this comes up, we're going to have to write a letter of explanation. So you're not hearing it the first time when you're supposed to close in a week. And you're like, oh my gosh, they said if I can't prove this, I'm not going to close.
So Trish, and you and I can kind of speak to some of those examples she gave coming from the banking industry. And mind you, we've worked at several different banks throughout our career.
Mm-hmm.
Do you have any thoughts or insights on that, Trish, where she specifically spoke to the fact of, client comes in the bank, wants to apply for a home loan, sits with a mortgage officer. By the way, I didn't know that there's a difference between them having to be state licensed and what that entails. But Trish, any insights you want to give from your experience of seeing this firsthand?
Yes, and if you don't mind, I'd like to give an insight as a financial advisor because even though,
Okay,
yes, I do
definitely.
have the background, the banking background, which has kind of gotten me here, I'm no longer in that space. And so the new space that I serve also requires for my clients to understand kind of, that process. And one thing that I can honestly say is when I speak to my clients now, that need financial advice, that need to have a financial plan. One of the questions is always, do you own or do you rent? And it's not necessarily because I'm trying to determine the assets, which I do help with that as well in protecting the net worth, but it's also to understand psychologically how they think, kind of what kind of person they are. And one thing that you mentioned tonight in regards to them understanding that it makes a difference between the person that has the knowledge and that is going to allow them to kind of maneuver through the process and someone that's like a bank that's kind of like very straightforward, that's just going to take the application wrong or not, and that is kind of going to go back and direct them based on the application, based on what they receive. That's huge, because I know for me, my clients, the reason why they even come to me for financial plan is because some of the reasons that you explained. And we see that. We see that unfortunately a lot of people are misguided, mismanaged, right? They're even told that they can't do something. And it's not necessarily that they can't save, that they can't get to the finish line, that they can't get a mortgage, to your point. It's because they don't have a person like you that is actually helping them get to the finish line strategically. And that's huge, because I know for me, my personal experience, I had to like jump from like this lender to that lender to that lender when I purchased this last home that I'm in. The previous one was straightforward, because when it's a cash deal, it's pretty straightforward, right? It seemed like it's like pretty straightforward. But with this one, I had a crazy experience, because it seemed like to your point, it seemed like, take the application. First of all, as consumers, we have so much going on. We're not going to calculate. We're just going to kind of round things up. We're going to kind of like do whatever. We're just trying to get this paperwork through and done. We want you to kind of pretty much, we want you guys, between you and a J, to kind of get us to the finish line,
Right.
So, yeah.
That's very true. I used to work at the bank as well. I started out working with Wells Fargo. I worked with them for 5 years. So I definitely, understanding both sides, it helps, because you know what to expect, you know how it is. And when someone goes to a bank and you're like, they come right back, because you don't have that A-cut situation. And it's not a bad thing. Sometimes we just need a little bit more structure, and we have to be strategic, because this is our largest financial investment, so.
And I will, just to wrap that and go on, I will say there's no diss to banks or anything like that, because they are able to provide some people with approvals all the way to the end. But in our industry, I will speak for myself and fellow agents. I'm not saying whether it's right or wrong, but a lot of time when we're in a multiple offer situation and we look at those pre-approval letters and we're calling those lenders to kind of get some insight, one, we do have a challenge when it is for larger, well-known banks. But two, when we look at how competitive they are, we are finding that outside lenders, or lenders such as yourself with CMG, they can be more competitive in a market like this one. So it's very important, one, to make sure you are vetting and choosing your lenders wisely, but two, listen to the person that you hired on, i.e., me, your agent, to know we've been through this, we know this, we vet this, and a big part of this process between whether it's real estate agent, lender, or financial advisor is trust. So I want to kind of start with this one, because I know it'll help with a lot of other things. Can you quickly or briefly walk us through the process? Like, we call Allison, like, what are we doing? What's the process to buy a home?
All right. So typically you come to me, you're like, hey, I want to purchase a home. One of the first things that I'll ask is this your first time going through the pre-approval process? Because that will tell me a lot. You'll say, hey, I'm first time, or I went through last year, I got denied, red flag. Let's see what's going on. That means I need to dig a little bit deeper to see why didn't it work the last time. So after my series of questions, I'll give a checklist of documents needed, a link to complete an application. And once I receive all of your documents, some of those documents are going to be your pay stubs, W-2s, tax returns if you're self-employed, bank statements, 401k, any assets that you have. A lot of people think I don't want to show how much money I have, because I don't want you all to make me use that money, but it does help when you have assets. It's not going to change the amount of your down payment. So I'll request those documents. When I get them in, evaluate for pre-approval, you'll get this magic number, and that's the amount that your agent or realtor can start sending homes, showing you homes for. After your contract gets accepted in 6 months, I'm joking, that's how it feels in this market. But after your many offers that you go through and you're wrestling trying to get a home, you get put under contract, and then you bring the contract back to me, your loan officer. And then if, let's say, there are any documents that are outdated, such as bank statements or pay stubs, will get some of those requested items. And then you'll receive your initial set of disclosures, which is important for people to read because sometimes people will show me their initial disclosures and it'll be a hot mess. They'll have different subordinate loans that they don't know about in order to qualify. Um, you just want to make sure that you review that document, make sure that it's okay. It should be a very close estimate as to what you'll need to bring to the closing table. Once you get that and sign it, your loan is submitted to a processor, then submitted to an underwriter. We order the appraisal, title. In the background, your realtor might be, or agent, they might be scheduling a home inspection. That's separate from our side. We care about the appraisal and value. And then once the appraisal comes back, your title comes back clear. When your title comes back clear, that basically means that the seller owns the property and has the right to sell, which is very important. There are some situations where maybe if the property was owned by a business, you want to make sure that this person is authorized to sell the property. We've had situations where it wasn't the right person, you might have to make some changes. So after that, title is in, your income is good, meaning we did a verification of employment. Everyone's looking for the clear to close, and that's where the magic happens, and then get to schedule closing. You go to the closing table, shake hands, talk to the seller, how's the neighborhood, tell me about the nosy neighbors, and then that's it. It may sound like a smooth process, but again, there might be things that go on behind that. Let's say if there's anything that comes up, underwriters can see your whole life. So sometimes I know people, they will have conversations with me and it seems like, they're kind of hiding something, but they don't want to tell me because they don't want it to pop up. The underwriter, they have a report that is your entire world, and they can see those things like deeds, undisclosed properties. Anytime that you open new debts, if any new debt opens up, we have to add that to your DTI. So you just want to make sure whatever financial situation you were in when you went under pre-approval, that's the same financial situation that you're in when you are at the closing table or when you get that clear to close, because any changes in between can change, either add some additional verification or it can impact your loan. So that is the mortgage process.
Well, that's good. And see, I love the way you said at the end, it sounds smooth and it sounds like a 60-second type of explanation, but it's not that. A lot of times with me, when I'm talking to my clients, I let them know our relationship is very similar to like the attorney-client relationship. I cannot do what's best for you if you are not honest with me. Mm-hmm. I care not at the end of the day what you have and don't have when you talk about being nosy, but I got to do what's best for you. And to your point, when clients are dealing with licensed individual, at some point it is going to come out. And I think that is more heavily on the lending side, just because with the underwriting process. Trish, on your side, when clients are kind of having that relationship with you or telling you things up front, can you only go off of what they tell you, or somewhere in the process do you find that information to be true or not?
That's a good question. But first, I am going to be the devil's advocate for the both of you, because you are in a world that I'm not in, which is real estate. Mm-hmm. Can I be honest? Sometimes we don't feel comfortable. I'm talking for the consumer, which I am, because I'm probably going to get another loan and another mortgage here in 2022, right? We don't feel comfortable sometimes telling everything to our real estate professional. We just don't. And then, mind you, we then have to talk to the lender. The lender, we do understand that we have to disclose everything. Like when the lender asks me for, show me this, because I'm trying to get my loan, I'm just going to give that lender everything she wants me or he wants from me, right? But so how do we overcome that? And sometimes, I'm not going to lie, I might still not tell her everything, because I know that because of the professional that I am, I know that there is an underwriting process that's going to go kind of beyond her, right? And then, but then now I'm learning something tonight. You guys find everything out about me when I submit my stuff. So what that means is that I'm actually being lied to when they say, oh, when you speak to the lender and you speak to that other person, everything is between us. Everything is, you know, when we're not sharing that with your real estate agent. So I kind
Well,
of
no. They don't. No. I need, so they can't, they don't share it with me.
Yeah, we
The
don't
only
share
thing the
that.
lender tells me is, here's a pre-approval letter, they're good. If something's wrong, so I don't know how much money they make or anything. They just said they're approved for this amount. When I say they know everything, I'm talking about, so if I submit an application to Allison and I say whatever, if I lie, at the end of the day, that still goes to underwriting. So between
Right.
them, they're going to find out
Yeah.
what I lied about. And that could either
But Allison,
mess up the process or not. But they can't share that with the agent.
Okay.
No.
But Allison, ultimately, you're going to find out everything. That I don't disclose everything to you or not, right? Things are going to kind of come back to you.
Yes, I'm gonna find out everything. I get alerts literally like, oh, undisclosed debt, credit card, this, that. I'm just like, didn't I tell you? And then, but credit card, you know, we don't, I'm not going to say we don't care, but, you know, credit card payments are usually low. So usually I could just spank you and say, hey, don't do that anymore. Don't touch that credit card.
Yeah.
But if it's a situation like I had, I think maybe it was either last week or 2 weeks ago, but if you have a relationship with your agent, then one of my clients got into a car accident. And so her car is totaled. She's going to have to basically get another car note. Car notes we know are expensive.
Yes.
But if her agent knows that, she reached out to me and said, hey, this is the situation. She was kind of concerned, like, is her loan going to fall apart now? What should they do? They need a car to get to work. She's doing new construction, so that doesn't close until December. So, of course, we're going to end up finding out. So instead of it being a situation that pops up because she's afraid, she doesn't want to say, I said, okay, well, you know, how much do you think you're going to be getting a car note for? I know you had some wiggle room in your DTI. And I went to play with numbers and I told her, you can get a car note for don't go above 800.
Right.
Now that's a lot. She had her current car note was about 700. That can give her some relief where it's not something that's going to pop up. But we know that if her DTI goes over a certain range, that can change her loan program. She can get denied. But because she has that relationship with her agent and I have the relationship, they feel comfortable coming, kind of being proactive. So it's always best to be proactive because now if the underwriter says, did you know? Because they underwriters, I look at them, I don't want to tell y'all, but they never have good news, basically. They're going to be like,
that's
oh,
bad.
listen, it's
They
like,
don't go out. But I just to answer the question real quick, Jay, with me, it's a little bit different. I have to ask for statements. So no, you can't just tell me whatever because in order for me to design your financial plan and to really help you, right? There are some things that I don't have to have statements for, like when we go over your expenses, for example. I believe if you tell me your rent or your mortgage is this much, your light bill or whatever, I believe that. However, if I have to help you, then I need to see some statements. But for me, I hold a responsibility to not share anything with anyone. So that is not even information that I would be able to share with you or share with Allison. That would kind of be me letting them speak to you guys, letting you guys know what their wish is, right? In regards to purchasing a home and then kind of letting you guys, you know,
do the rest.
Yeah.
I know for me, I usually when we're that far in the game, like maybe under contract, I tell my clients straight up, look, you could talk to the lender. That's who you have to tell everything to. I want you to feel comfortable telling me anything about your finances. But now that we're under contract, anything that has to do with credit, you need to tell me first. If you need to buy a car, I need to know. If you need to buy furniture for this new house and you got to put it on your credit card, I need to know before you even think about doing it twice, because those are things that could cause that hiccup in the end. There are so many deals that are on the table where closing gets delayed or closing gets cut because someone had to buy a car or someone bought furniture because they were so excited, but they put it on their credit and now their DTI has shifted. Or if you have any big income, maybe somebody wants to give you $10,000 out of nowhere. I'm gonna take
Yep.
it, but we need to talk to Allison before we take it to figure out how we need to take it so that we can
Right.
still buy this house. So
Mm-hmm.
having that trusting relationship is
Right.
super important. And I don't diss how agents get their leads and things like that, but I will say sometimes it's tough to have those conversations with an agent that you found off Google or a lender that you don't know or that the agent that you do trust doesn't know. So that kind of wraps that. But really quick, Miss Tudor, and I apologize if I said it wrong, she says, does your credit determine whether or not your loan is FHA or conventional?
Hey,
Oh,
Tiffany. That's Tiffany.
oh,
That's Tiffany.
oh okay.
Hi, Tiffany.
So
Hey,
what
Tiffany.
determines if it's FHA or conventional?
All right. So FHA loans, that's a government loan. Conventional is all other. Um, so when it comes to government loans, they allow you to go, most lenders allow you to go down to 580. During COVID, there was different overlays where usually it had to be like 620, but now things are getting back to normal. So for the most part, it's 580. Conventional loans, those are investor based. So with those loans, even though the minimum score is 620, the the guidelines might be a little bit more strict or might be a more appealing to higher credit scores, usually 680, 700, because if you're putting down under 20%, you have to pay mortgage insurance, PMI on an FHA loan or mortgage insurance on a conventional loan. And PMI is a lot higher on low scores to where it doesn't make sense for you to do it. So even let's say if there's someone that's pre-approved, they can do both FHA and conventional. When it comes to pricing and their monthly payment, they might work better doing an FHA loan because their PMI is lower on FHA than it would be on conventional.
Okay.
So there are just certain things, and these are the nerd things that, I would say if we go into detail, people might be like, what is she talking about? But it's very important that you have someone that can look at those different benefits versus just giving you a pre-approval for anything because it works. Another thing with FHA loans, they allow you to go up a little bit higher when it comes to DTI, whereas conventional, um, they're looking for it's not more strict. I don't want to say more strict, but income assets are going to work a lot better on a conventional loan. And there are lower DTI requirements, which means they want you to make a little bit more money in relation to your debts. Um, so that's the main difference in this market. I know there's like an FHA ban that was created by somebody, I don't know. But FHA loans are still good loans,
They are.
and they're really good loans, and sometimes your pricing may be a little bit better. And the funny thing to me is last year when rates were historically low, FHA loans were like the ish, for lack
Yeah,
of better words. Like if
right.
you compared FHA rates to conventional rates, FHA rates were so lower than conventional last year.
Mhm.
And this year it just kind of flipped. Um, so
That's
the best thing to
crazy.
do, yeah,
Well,
the best
in
thing to do is
respect,
see what you qualify for. That's what I was going to say. And see which program works best for you and your credit situation.
right. Well, one thing I was going to say is because FHA typically sometimes can give you a better rate, some people choose to do FHA
Mm-hmm.
when they can still do conventional. But in this market, to your point, for some reason, there's this overcast when it comes to FHA. But
Mm-hmm.
also, where you mentioned earlier, where you have lenders, this is the same thing that applies to agents that have been in the game for a very long time. They're very cookie cutter. I had a
Mm-hmm.
client who I put in an offer on a home. The agent loved the offer, and her license number started with like a one. So
Mm-hmm.
she's been in the game for a while. But she
Mm-hmm.
called me and she said, well, I just want to make sure your client can buy the house. And I said, well, what do you mean? And she said, because he's FHA, that means he doesn't make a lot of money, right? So for those of you that know me,
Right.
probably know how that conversation went. But it's just crazy the stereotypes or things they put out there. Now I'll be very honest.
Yeah.
Unfortunately, and Allison nor I know how things got this way. There is a cloud over offers that come through that's FHA,
And
But
even
oh
VA
yeah,
and
VA.
FHA are both having, and you
Yeah,
know, those are military. Like that, people used to want a VA loan. Like
yeah,
that used to be a hot commodity. Like, oh, I'm VA. You know, a whole different attitude.
yeah, yeah. And now it's like a cloud. But I promise you, I still get FA, not FA, VA, but FHA loans one. So you just got to
Hmm.
have someone, you got to have an agent and a lender that's willing to fight for you if that is your
But
Right.
situation.
But isn't it because of all of the
Hmm.
requirements though? Like, I do understand that FHA and VA loans have like certain very strict requirements as far as making sure that the home that the person is purchasing meets, right? Isn't that the reason why? Like, if I was a person, right? If you're trying to buy my house, I'm trying to sell that house to you. And so I'm waiting for, you guys to educate me, because if I'm selling this house and I see, and Allison and Jay are telling me that there was an FHA and a VA loan versus a conventional loan or even like a cash offer, right? Of course, I might lean more towards that because I know of all of the checklists that has and all of these check marks, right? Because of the way that FHA loans are backed up and the VA loans are backed up, and the requirements are a little bit more strict. Am I wrong?
Yes.
Okay.
So my favorite thing to do, my favorite, no, for real.
I was like, that's
Chime
gonna be
in, chime
Allison.
in.
Allison's gonna answer that.
My favorite thing to do is to
Yes.
hear like when the appraiser requires repairs on a conventional loan and they're like, why do we have to do repairs? This is a conventional loan. No. So people think that just because the loan is conventional, you can purchase an as is property as your primary residence. Again, these are investor loans. So if you are giving someone 97% loan to value, that means they're putting down 3% on a house. It's not like they're putting 10, 20% down, 10% down. What the likelihood of them paying their mortgage is going to be if they're in a place that is livable, that is safe, that doesn't have any hazard issues. So if you're purchasing your primary residence and the appraiser goes to inspect the property, the appraiser cares about value. Is this house worth this amount? Are there any safety issues? Are there any hazard issues? If they feel that there are any safety or hazard issues, they are going to request that that be fixed prior to signing off. So that means the appraisal is going to come back subject to repairs. Conventional loans can come back subject to repairs. And I don't know why people, well, I know why, because of the information that we hear
Yeah.
out there. But
Right.
just because you have a conventional loan, it does not mean that, you know, you can just sell the property anyway.
Okay.
If it's an investor and they're putting down 20% or a higher down payment, then that's a different situation because they have more um, cash invested in this transaction. But your average person on a conventional loan that you're accepting or that you'll be, I guess, weighing out offers is going to be them putting down 5% or 3% versus an FHA offer, which is putting down 3.5%. So that's all in the same range. And all of the investors care about you. What is the likeliness of you paying this house if it's livable?
Okay.
Right.
No,
Now the
thank you so
Holy
much for that
Grail.
clarification. And that's why we have those Secret Sauce Sunday, because
Yeah.
honestly, so many incorrect information is being shared out there. And that is my first time hearing it that way, Allison. So thank you so much.
You're
Yeah.
welcome.
Yeah.
Yeah. And I would say, of course, cash is the Holy Grail. It's going to be very hard to compete with that. But if if you want to be a cash buyer, let me put a shameless plug, then contact me because I can tell you how you could be a cash buyer without physically having the cash in your account. And that could possibly eliminate some of these things, but not all, because at the end of the day, some things need to be done to homes before you sell them. I mean, some of the things that are required are safety and hazardous things that we want you to do. All right, a couple of quick questions so we can entertain other things as we go on. So Allison, got a lot of time to talk. Okay, so rates. So of course there's a lot of information out there that rates have been historically low for the last several years, and it hit a pivot last year.
Mhm.
On average, where would you say rates are right now and where they're projected to be this time next year?
Okay, so I'll start with last year. So rates were so low. Okay, the pandemic started. All loan officers were just like, oh my gosh, how are we going to get business? How are we going to get clients? What's going to happen to the mortgage industry?
Mm-hmm.
What's going to happen? So if you were in the mortgage industry, you would see rates. I mean, they were just ridiculous. Some people could get a rate high 1%. Like, that's nothing. I refinanced my house last year and my rate is 2.375%. I'm here like I can never sell this house now because I'll never be able to get that rate again. Rates right now, if you have excellent, good credit, you can still get rates in the high twos, but for the most part, on average, your rate is going to be between the threes. If it's in not so good shape, probably the low fours. Um, so I feel like that is a good range. 3 to 4% range is probably even where it will be next year, but the twos are just going to be slowly non-existent because that's historically low. And last year when we were preaching and telling everyone to buy, there were a lot of people buying, but there were also a lot of people hesitant, which
Because
I want to say that people need to, by the time you feel comfortable and wait, hop on the train is gone. So
right.
now we're getting people this year who want those same rates. Like they're looking online, like, I want my rate to be this. Like, when I got my interest rate and I went to closing, they were like, this is the lowest rate that we've seen in this office. So if you're asking for that rate this year, you're not going to get that. So it's more so you have the market changes daily. I send out different information on rates or different information weekly. I'll make posts, but the trends change daily. So it's really hard to project where it's going to be next year. That's why I always say the perfect time to buy is when you're financially ready to buy, because you can never chase rates. Some people, they will say, oh, well, I'm going to go to this other lender because they promised me this rate. Then they come back because they didn't promise them that rate. Or if you come and you want to lead with a low rate, you'll look on your loan estimate and you'll see that you're paying for that rate,
Yeah.
which is what a lot of people don't understand. And I'll get people who come to me rate shopping on a pre-approval letter, and I'm just like, that's, to me, that's the worst thing that you can do, because to a loan officer, loan officers are pretty much, you have to have a couple of screws loose to be a loan officer. So they don't always have your best interest at heart, but
Mhm.
that puts you in a bucket saying that, hey, all this person cares about is rate. So that means you're not going to be looking at your closing costs to see if you're paying buy downs. You just want the lowest rate. So it's automatically putting you in a situation where they don't really care about your best interest. But on a pre-approval, they can't lock your rate. Your
Right.
rate is usually locked for a period of 30 days, 45 days, 20 days. So sometimes people are stuck on the rate that they're given, but as a loan officer, they can tell you any rate. Because I've seen conversations, I've been on emails where certain agents make promises that they can't keep, and not agents, loan officers,
Mhm.
and they'll say, oh, well, the market changed. But when we hear the rate that was quoted, it's like the market didn't change. They could have never got that rate,
Yeah. Yeah.
or and so many things factor into rate. Is this a primary residence? Is it an investment property? What's the loan to value? There's so many things. So whenever you're under contract, I feel like that's when you should focus on your interest rate. Have conversations about, okay, if I are there any buy down options? Maybe just a little bit. Maybe that's when we can talk about lender credits to get you down to where you need to be. But if you're just going rate shopping on a pre-approval letter, you're never going to get that rate. I would challenge people to literally, if you are given a quoted rate, when it's time to lock your rate, if it was very low, what excuse did they tell you? Because they're always going to tell you some excuse. And most of the time they're going to say, oh, the market changed, but you were never going to get that rate in the first place.
Right.
Whereas someone being honest to you and quoting to you a realistic rate, and
Mhm.
then once you're under contract, we can discuss different options. And usually I always, if I can apply any credits to get you a lower rate, I will. But most of the time, they're not going to do that. They're just going to sneak a buy down of $2,000, and your closing costs are $2,000 higher than they needed to be, or $3,000. Because every rate costs. So just keep that in mind, and then just watch the market. Is it going to be a seller's market next year? I didn't think that this year was going to go how it went, because last year inventory wasn't so low. It was competitive because rates were low, but
Right.
this year is way worse than last year to me. So it's just about seeing what happens, what the trend is next year, and then we have to put on our gloves and figure out, okay, which war are we going to fight next year in real estate?
Oh my God. Are you guys listening? Like, this is James. Like, seriously, you know what? We're going to stop, because Allison is like, no, this would require like a minimum of some kind of fee for anybody to get this information. I hope you guys are taking notes, because first of all, this is just, she's just showering us with like blessings, and
Thank you.
this is amazing. No, that's just James.
I'm trying to cut her off, but I'm like, she's giving it, and I'm like
my
anybody
like,
who, right? But if you're not
I'm a
catching
mortgage
it,
nerd. I'm a real mortgage nerd, so it can get real deep.
but you should be. This is why I've watched you for a long time, and I was like, I told Trish like a few weeks ago, I was like, I got the right person. But it's so much stuff you're giving, and a part of me outside of people taking notes is I actually hope they don't get everything.
You're welcome, Tiffany.
Because you need to reach out to Allison. You need to tell her Jay sent you. Plug.
Okay.
You need to tell her Jay sent you, because it's more than an IG live. It's more than what can be done in 30 minutes. This is the biggest purchase of your life, and it's just so many ways you can look at it. It's just so much information. We're just trying to get you fed. But the rest is you taking that next step. We're going to present it to you, but you got to take that next step. For all of my agents that are on the line that may want to hear this, because Allison, you know how we are as these agents. We want to know this is this. So with your position at CMG Financial, are you able to spit out, when you're trying to be competitive or just being you, are you able to spit out your timelines for us really quick? Like how competitive you can be when we're writing an offer on your closing times, contingencies, appraisals, things like that?
So I'm pretty old school. Like when it comes to contracts, I request 30 days. We can close in 21 days. We can close how fast you want us to close, but we are as fast as the appraiser is, or how fast the client is when it comes to giving necessary documents. So we do have something that's called the HOV lane. Basically, it's a one-touch underwriting process. So initially, when your loan goes to underwriting, you're conditionally approved, and then you are resubmitted for final approval. But if you qualify, then we'll get an alert that this loan can go under HOV, which means it's one touch. You can be approved, and all we're waiting on is the appraisal and title. So typically, if it's an HOV lane client, I'll make sure that they know, so that way we can get all of their documents on the front end, which eliminates the need for conditions. But when it comes to anything else, you know how y'all agents are. You put whatever you want to on that contract, and
I do not.
You know,
I do not.
Good. I'm glad you don't, because some people just put anything, and I'm just reading like, what? So for the most part, whenever it's a situation about specifics, I would just say, let me know if, let's say, you want to do a quicker turnaround time for any contingency, or if you'll be eliminating any contingency. That way I can make sure that I look at any red flags that would prevent that from happening. And then we can do realistic, because I'm all about transparency and setting realistic expectations. So unfortunately, if I feel like that's unrealistic, you probably won't like me or choose me, because, you know, I'm going to say, hey, no, you know, this appraisal is, we can do appraisals in a week, you know, in 5 days. We can do rushes. We can do however quick you want us to do it, but you have to know what would be needed for that. You know, if there's any fees or anything, I'm just transparent about anything that you're trying to do.
Right.
And I just want to say real quick, real quick before we continue, that statistically, Black people just do not own, right? They rent more than they own. So I just want everybody to really listen to Allison tonight and really listen to Jed tonight and really get this information. You won't be able to just, remember all of it, but hopefully this also helps you to better understand the process so that you're no longer afraid of it. Because what I find with my clients is that, so a lot of them guys have the assets, they have the money in the bank, they have the behavior, they have all of that, but they're afraid to actually do the process. Number one, because of trust. And we talked about that earlier. They're afraid to buy because they just don't trust anybody. And unless I kind of support that dream and guide them and tell them, hey, you must speak to Jay, and actually even connect them. Like I will literally directly connect them with Jay on the phone, and for Jay to be able to say, I have a lender that looks just like we do, that is going to do the work, that is going to be your advocate, that you can trust. Like sometimes it's those barriers, right, that come in the way of us making this purchase, which by the way, owning real estate, and I hope everybody that's on this call hears me well, owning real estate is part of any financial wealth. It will set you up for success financially, period. And I want us to understand that, because again, it's so sad that so many of us do not own, again, because we're not comfortable. And so thank you so much, Jay, and thank you so much, Allison, for really taking the time to really explain those things, because I think it's going to help a lot of people tonight understand that this is how it happens and this is how we work. And you can trust that this process, can happen for you as well.
Right. No, that's amazing stuff. I think Allison went out, and I'm trying to get her back in.
Okay.
Hold on one second. I think this.
No, but Jed, this is great. Honestly,
yeah.
When it comes to owning,
there we go.
Okay, there she is. What did you miss, Allison?
Oh, I heard everything, but somehow
I think it was coming through.
Happened.
Yeah, so it's good information. And if you aren't following all three of us, definitely just start following us so you can stay in touch with us. We're not done, but we'll continue to wrap. We'll get to wrapping, but there was a question or two questions that came in from I Love a More. One was, should I shop around for a lender or just use one my realtor recommends? If I shop around, then what should I look for? We discussed that early on, but I will say, and this is not just as an agent, but if you're going to trust your agent in this process, then at least trust who they may recommend. And usually an agent should probably recommend more than one lender. But also, if you're going to shop around, to Allison's point, it's kind of not a vibe, but it's a atmosphere that's set. You don't want a lender who's just going to be taking orders, like, well, just submit your application and then we'll go there. It needs to be a consultation because of the type of purchase that you're doing. And if you want me to explain that more, if you could send me, if you could message me, I'd love to chat with you more about that. The other one is more so for Allison. It says, is there a difference between lenders when considering to purchase a permanent residence versus an investment property? So does it matter?
So can you hear me?
Yes, we can hear you.
So a lot of people don't know this, but most lenders, most loan officers have access to a lot of similar programs when it comes to your investment properties, primary residence, second homes, bank statement programs. The thing is, the actual loan officer may not be familiar with using those programs. So will it get you to the closing table? You will want to make sure that they understand the guidelines, because if they don't, then they might not know certain requirements, whereas we have to boost or submit. I don't know if y'all remember when I said earlier, we have to paint the picture to the underwriter in order to get the loan closed. So the requirements for an investment property are going to be different from purchasing your primary residence. You just want to make sure that that person has experience with doing those type of loans. And then they can make suggestions as to which program would best fit your needs. And also, we're thinking investor based on the secondary market. is this investor going to approve your loan application? Are they going to buy your loan? So those are some of the things that come into play when it comes to investor loans versus primary residence.
Now, just to
But I
keep it
do them all.
funky, are you well versed on investment loans? Like, are you able to assist clients that want to have investment properties?
Yes, so investment properties, second homes, and the thing with second homes, a lot of people don't know, but second homes are used a lot when people are relocating from different states. So you just want to keep that in mind because maybe you're wanting to get approved prior to relocating on that higher income. If you're coming from a place up north or out in Cali and coming to Georgia, where the income might be a little bit lower if you're transferring jobs. So those unique situations, if you're relocating, speak with someone prior to if you're trying to purchase a home to see if it would be best for you to do it prior to or before. But like I said, I'm a mortgage nerd. So when it comes to programs, I do all types of programs. I do investor loans, bank statement loans. I have access to hard money lenders as well. But I hear a lot of people, I do want to talk about hard money since I brought that up and we're talking about investor loans. Sometimes people will have that as their go-to, but if you can qualify for a traditional financing with a traditional lender, that is going to be always the best route to go because interest rates and just a better loan program when it comes to terms. A lot of times when you get outside, what we call them non-QM um, loans, that's it's not a qualified mortgage. Um, the terms might not be as appealing. So maybe you'll, instead of doing 30-year, you might have to do a shorter term. Uh, so I always say, talk to a lender first, see if you qualify for just traditional financing. Most of the time, we can broker out loans to other investors who have more flexible options. But when it comes to those options, you're going to need to have assets. So that's going to be savings, reserves, because now they don't, they want to, okay, how do I say this? Think about if you were giving your money. If you were giving your money to someone, you want to make sure that they're the type of person who has the assets and resources to pay it back. So when you're getting a traditional mortgage, in some cases you can spend the last in your account. Like, they want to make sure, do you have enough money for closing?
Right.
If you have $505 in your account after that, a traditional loan is, they might not care. The lenders might not care because you're paying mortgage insurance, you're
Right.
protected a little bit more. But
Mhm.
if you're going to those non-traditional mortgages that are more so definitely investor based, they want to see, okay, do you have 6 months reserves after you
Yeah.
come out of pocket 20%, 25%? They're not going to let you go down to your last. And the
Right.
down payment is not going to be anywhere near 3%, 5%, 10%. Usually it's going to be about 15, 20% max if we go out to those non-traditional or hard money loans. So just keep that in mind if you're not looking to put down 20% in your mind. And then we're not even talking about closing costs. Because
Right.
closing
Right.
costs, that is
So
going
let
to
me ask
be,
you, Allison, right there, because you mentioned, so right now we're talking about, um, some of the concerns that some people might have. So what about my clients that had to, and we're not talking about clients without assets, but what about my clients that had to go through a bankruptcy, like a Chapter 7 or Chapter 13?
mhm.
What would you want me to tell them?
So I actually have a chart that has a timeline on my page that I posted it because it's going to depend on the type of program. FHA has their own requirements, conventional, VA, USDA, all of those. So you want to see one, what type is it? Is it Chapter 13, Chapter 7, and just see does it have to be discharged for 2 years? Does it have to be discharged for 4 years? Each one
Right.
has their own requirements. So you can still get a mortgage, but also you want to keep in mind after a bankruptcy, you want to speak with a lender because in many cases you're going to have, I'm not going to say necessarily strict requirements, but there are compensating factors that might have to align in order for you to qualify for the amount of house that you're getting.
Mhm.
Compensating factors, that's something that you can Google as well, but those things might be rent. Was there just a minimal shift in your rent? Or do you have 3 months reserves, 6 months reserves? Another compensating factor might be residual income. Like if you don't have these things, then your loan might not get approved. So it might not just be the waiting time. There might be certain things that may come up after. And if your loan officer, again, is familiar with those guidelines, when you're going into it, you can let them know, hey, do you pay rent? You know, because some people might not be living, they might be living rent free. And we want to include that rent on the application. I don't know if you received it, Jay, but also they are considering rental income when it comes to conventional Fannie Mae loans now.
Yes.
But they did that before as well. It helped. It was a compensating factor. So
Mm-hmm.
sometimes, many times when people complete their application, they don't include their rent, how much they're paying for rent, but that
Right.
can actually help you. So I would just say that's why you want to work with someone you trust. That way, if it's a situation, they're not focused on, okay, well, how many years does my thing have to be discharged? Because that's usually the first thing that they go to.
Okay.
Are there any other additional requirements that the underwriter is going to beat me over my head with a week before closing? Then you're going to have to try to pull out statements. You're going to try to, I've had situations, it wasn't for a bankruptcy, but where they had to have cash reserves. I think it was a COVID overlay, something. Things pop up, you know,
Yeah.
and it could not be a gift. They were receiving gift funds. So cash reserves cannot be gift funds. So let's say if I think a portion of their closing costs were paid, because that's when people pay closing costs. They still pay closing costs, but it's a little bit harder now. But you have to be strategic,
Yep.
not harder. But closing costs are paid. They're receiving a gift, but they needed to have reserves um, because of whatever alert popped up during the underwriting. And that person, we had to delay closing because being strategic, once you're under contract, your loan is not falling apart. I don't care. Like, so I had to tell them, like, I need for you to save every paycheck. Like, I think she needed 3 paychecks in order to get to the amount of reserves that was needed. And she literally had to live off of cash. But because the reserves had to come from her, we can't have large deposits. So I need you to stack those direct deposits from your job in your account and live off of bills from your husband, because her husband wasn't on the loan at the time. But those are some of those situations where we have to be strategic if something arises and you need cash reserves, because it can't be a gift. It has to be your own money.
Mm.
Mm.
Good stuff. I don't even have to say that at this point. You're giving so much information. There was a question that came in, and I could probably clean it up a little bit because I actually have some clients that are traveling nurses. But the question is, I am now traveling as a nurse, and I hear different things from different people about being a travel nurse and buying a home.
So the reason that you hear those things are because, well, it's because you're in an industry where you have variable income. Whenever there's variable income, usually they're going to want to create an average in order to say how much you make a month. So it can be a situation where, let's say because of COVID, you're making 10,000 a month for the past 2 months. You'll put on your application, I make 10,000 a month. But they're going to probably want to average, depending on your mortgage program. The most popular common way is averaging your income over a 2-year period, and then averaging also the year-to-date income. So in many cases, that is going to reduce a lot of people's income whenever we have to go based on an average. Um, so it's not necessarily saying that you cannot do it. You just have to have a solid pre-approval, which would be providing your pay stubs, your W-2s, and then that originator knowing how to evaluate your income. Especially with COVID-19 last year, a lot of hourly employees, they didn't work a lot of hours last year. So underwriters were automatically just, hey, we're going to reduce their income, reducing income left and right. You have to be like, no, they are full-time working 40 hours. They are back to work. We're not reducing this income. But it can be a tricky situation when your income is variable. So that's why they say that.
Yeah. How much money do I need to purchase a home?
How much home do you want?
Let's say I'm pre-approved for 300,000.
So it's going to depend on your debt, to be honest.
Okay.
Someone who is making, I've had situations where there are people, not 300,000, but some people that make $16 a hour, right? You would think, how am I going to buy a home $16 an hour? How am I going to buy a home $13 an hour? I work with, I'm licensed in Georgia and Texas. So in order to reach a broad audience, some I network with agents in smaller towns
Mm-hmm.
where these people, they've been working on their jobs for years, stable income, but their hours are low, but they don't have a lot of debt. So it depends on your debt and your income.
Okay.
Um, you don't have to make a lot of money. If you don't have a lot of debt, then you definitely need to buy a house because it's the people who have a lot of debt where their situations are a little bit more tricky. Not saying that they can't buy a house, but you just would then want to say, okay, how much can I buy with this amount? I have a car note, I have student loans, I have credit card debt, I have all of these things. But if you're somebody that makes a little bit of money, and well, not necessarily, I don't like to say a little bit of money because that is subjective. But if
Mm-hmm.
you're someone that feels like you don't make as much money and you feel like you can't afford a house, you may be able to still afford a decent amount of house, 200, 250,
Mm-hmm.
because you don't have a lot of debt. So that's always a good question. Get pre-approved, go through the pre-approval process, submit all of your documents so we can see how much house you can afford because it might surprise you.
So, and I like that analogy because most people think, oh, I make all this money, I can buy a house. Well, we need to see what you have to pay to the creditors because you're
Right.
also a creditor. So good explanation on that. If it were a percentage though, if I am purchasing a
hmm
$300,000 house, how much money do I need like up front? Like where am
hmm
I getting those? How can I prepare for this home I'm trying to buy?
Yeah. So if you are going to be using your own down payment, if it's FHA, the down payment is 3.5% of the
Okay.
purchase price. Um, and then closing costs, I always say closing costs, because people always think about the down payment. But in a market where if you want to be competitive, a lot of sellers are not paying closing costs. So
Mm-hmm.
you want to prepare to pay your own closing costs. And if you do get some closing costs paid, that's just icing on the cake. But
Mm-hmm.
going in, you want to make sure that you save for that. So closing costs, I tell people to save on the higher end, but if you Google, closing costs range between 2% to 5% of the loan amount.
Mm-hmm.
In this market, what Fat Joe said, yesterday's price is not today's price. So everything has gone up. Closing costs, that's going to be your lender fees, your title fees, attorney fees, brain fart, all of
HOA.
those fees. Yes, HOA, all those upfront fees, upfront taxes, upfront insurance. So before insurance, you could see $65 easily a month for insurance. And nowadays, insurance is usually around 100, 120, somewhere in that range. If I see it too high, I might just have to tell them to, go to someone else to get a quote. But all of those amounts are going to impact your closing costs. So you want to save on the higher end. 4%, 5%, it sounds like a lot, but closing costs can really be up to that amount, depending on the amount of house that you're trying to get. And you have to pay upfront insurance that protects you day one if something happens in your house.
Mm-hmm.
And a lot of people don't understand how the escrow works. So I'll just explain that. Um, every year you pay taxes and insurance. But instead of your homeowner's insurance or the county coming to you and saying, hey, here's your tax bill of $2,000, it's due. I'm sure there was somebody who was like, okay, this is not working because no one has $2,000 lying around. So now when you have a mortgage, you pay in escrow. That means that the lender is going to collect whatever your tax bill is divided by 12. They're going to collect that a month for your insurance, and that's included in your total mortgage payment. And they're going to collect that for your taxes. So it sits in an account. Escrow is like a savings account. And every year, once that tax bill is due or once your homeowner's insurance is due, the lender will pay it on your behalf. So you'll still get bills, but a lot of people will call me and say, hey, do I have to pay this? No, you're paying for it every month.
Mm-hmm.
But you do have to pay some of those items up front with closing costs. So a lot of people don't take those amounts. And if everything is going up in today's, if milk is higher than it was yesterday, then insurance is going to be higher.
Right.
Attorney fees are going to be higher. So just make sure that you save as much as you can. And then if it's a situation where I'm talking to someone, maybe their income allows them to get more house, then we may discuss down payment assistance options where you can just worry about closing costs, because buying a house, it can get pretty expensive. But if you budget, if you have money saved, go through the process, see how much you need, because there are other resources that don't require you to close in 45 days. You can do down payment assistance and still close in 30 days.
Yeah,
That's a
right.
shocker. Most
Right.
of the time, if somebody is using a down payment assistance program, well, the ones that close in 45 days, we don't use because nobody wants to use them. So that's why we use programs like Chinoa, and there are other programs out there that can close in 30 days. And we don't even have to disclose that it's down payment assistance because it's not going to delay closing.
Right.
So you're just getting an FHA loan. But there are many options out there. Speak with your lender, speak with me, and then we can go over how much do you need to save. But if someone has $10,000, yeah, go through the pre-approval process. You may need more than that, but there might be other resources out there
Yeah.
that will help you.
Right. And we're going to get ready to wrap. And what I want to say before I do that is a lot of times I do have clients that are saying either my credit is bad and I'm working on it, or I'm saving money. And I still position for them to go through the pre-approval process, because the
Mm-hmm.
lenders that I connect them with are just like you, and you're one of them. It's a consulting type of thing, because
Mm-hmm.
one, you saying you're going to fix your credit, but you don't really know how to fix your credit in the mortgage world, because that score is different, or you're saving money when you may not even have to have a certain amount that you think. I will promise you,
Mm-hmm.
most people that I ask how much they have saved to buy a house, the number is always $10,000. I don't
Yep.
know what it is about $10,000, but either you won't need that much, or really more than likely you'll need more.
Mm-hmm.
But it's still important to get a pre-approval. You have to know what you are doing, and you have to prepare yourself. But that's a whole nother tangent. Two things,
Mm-hmm.
guys. So just based off of this live, and Trish, I'm pretty sure you can attest to this. Allison, if you're okay with it, I'm pretty sure we will be bringing you back in some capacity, because there's just so much information and there was a lot of interaction today. So look forward to that. But also, guys, again, make sure you're following all of us. But reach out to Allison, follow Allison, get the information that she drops on a daily. But reach out to her if you had any other questions. Remember, let her know that Jay or Trish sent you, so she'll kind of remember the Secret Sauce Sunday. But we could be on here all night, and we're not going to, because
Mm-hmm.
I need to go finish watching football with my husband, and I have to invest in 50 Cent because he's just brilliant, and I'm watching
Oh
DMX.
yes, I watched everything
Oh,
earlier.
well, I didn't, because I have to wait for him. But anyway, I have things to do, and I'm sure Trish does as well. But use these resources. We do Secret Sauce Sundays genuinely because we just want to be a resource, but you got to continue to take those next steps. Too Blessed Carr said, I would like to speak with Allison. So, Allison, she's
Okay.
coming from me. If you could reach out to Allison, follow her and send her a DM. You all can start that conversation, and we'll go from there. Trish, what do you have for us as we wrap? And then I'll let you take us out. But Trish, what do you have?
No, but let's just make sure that the conversation starts with just wanting to do well financially. I mean, at the end of the very day, owning real estate, being in the real estate world should be part of your financial plan, period. I encourage all of my clients to own real estate. We always have that conversation. But to Allison's point, we also want to be prepared, right? And that comes with having a savings plan. It's just very simple.
Yep.
A lot of the time, a lot of us, because of what we've heard, we've seen mama them, grandmama them do it incorrectly. Now we're doing it incorrectly too. We don't have a strong savings plan. We don't even know how to save. We make a lot of money, but we spend it all because we're trying to impress people that don't even care about us. So let's just really do the right thing for ourselves and our families, right? By really building, having that savings plan, having the mindset of ownership. we need to own more. We have long ways to go. Long ways to go. And so I think tonight was great. Thank you, ladies, so much, because we could be everywhere else. We all have families and things, husbands, football, 50 Cent. I don't even know what you guys are talking about, but I'm going to go and look it up and research. I'm always like in the kitchen cooking something, and I miss a lot because I'm always cooking. But let's just make sure that we do the right thing for ourselves and our families. We look at other people and we wonder, how did they do it or whatever? Well, they did it because they quietly did what they needed to do. And they reached out to people like myself, Allison, and Jay. That's what they did, right? Let's stop acting like, oh, we don't know. Okay, now we here, Secret Sauce Sunday, right? We're going to have Allison come back because this was just absolutely amazing. And she shared really, honestly, more than a lot of us would hear in our lifetime when it comes to understanding that world. So Allison, thank you for being a partner. We really appreciated your time tonight. This was great. You're definitely a nerd, but you are my type. We need to go and have like lunch or something, ladies. That would be great. Yes.
Love it.
But thank you so much. This was great. Let's wrap this up. And Tiffany, Allison got me thinking I need to sign up for amateur night at Magic City. What?
Save that money, girl. Make that money. Don't let that money make you. So we gonna get you in this house.
Whatever you gotta do. All right, Allison, what do you want to say to wrap us up? Until next time.
Yes. So I just wanted to say, of course, thank you all so much for having me. When it comes to being in the mortgage industry, I was basically a dot floating around in some milk for a very long time, and still to this day. But what I find is that a lot of times we will go straight to older people in order to discuss our finances.
Yes.
And in order to be successful in this industry, we get the hardest deals. We have to learn how to maneuver through the hardest deals in order to get business. So I just want you to know that when it comes to expertise, just because, don't base it on stereotypes,
right,
or certain demographics,
right?
Because there are a lot of people who have a lot of knowledge out there to share, and that is why I started my social media. Continue to educate others, educate yourself. Finance is very important. So these are the conversations that we need to be having. It is so important. It's not a nerd conversation. It's important. It's your life.
Yes.
And don't be afraid to have those conversations with people who look like you, because just because they look like you, it does not mean that, they know less.
Right.
And once we get over that hump, we can really take over, because we'll be spreading wealth in our community.
I love it.
Thanks so much. And that's all I got.
Right.
Thank you, guys. Until next time.
Until next time.
All right. Thank you, ladies.
Bye.
Bye.
Bye.